Hey there, folks. This is Mitch Firestone with Precision Trading Labs in New York City. I'm here to bring you a quick market wrap-up for the week ending February 23rd, 2024, and also to talk to you about some trading levels for the upcoming week of February 26th. Excuse me. Um, Also to let you know, this was a short trading week. We had the President's Day holiday this week. So, of course, this week only had 4 trading days starting on Tuesday. Before I begin here, the usual disclaimer, everything that we do at Precision Trading Labs is for informational and educational purposes only. We are neither money managers nor financial advisors, and everything we're doing is, particularly for our subscribers, is to help them become competent, confident traders. So let's take a look at the charts here. And what I'm going to show you here, first of all, is we're looking at the SPY, which of course is the ETF, the exchange traded fund of the S&P 500. So, and that's kind of your broadest market index generally that's used. So people kind of look to the SPY for that, and that represents approximately 70% of the market cap of the U.S. stock market. So it's kind of like the biggest index that's generally used. So this is where we close this week. Here's where we actually this is the close of the last Friday. So right here, we had actually attained an all-time high a couple of weeks before in mid-February, and then that we came very close to that all-time high at the close of last week. At the start of this week, the first couple of days after the President's Day holiday, there was a bit of market weakness. It kind of gapped down. And, of course, people got a little concerned. My God, the market fell 2% or something, like 2 or 3%. And then Wednesday night, NVIDIA announced their earnings and knocked it out of the park. And so there was great euphoria over that. And so you'll see in all the charts that I'm going to show you, this is what I'm referring to here as the NVIDIA gap, because we're basically just seeing this in chart after chart, unsurprisingly, because the market took off from that. So so Thursday and Friday, this was there was the pop after the earnings announcement at the close on Wednesday. So Thursday was an energetic day, and then Friday kind of popped up and then kind of just sort of drifted and gave back a little tiny bit. So that's where we are now at just under 508 after hitting the all-time high of about 510. So that's where we are now. Excuse me. So below here, and if we look at this, this little pivot down here, there's a drop, a base, and then that pop up here. If we actually turn this into a 30-minute chart here, we can actually see that there is a clear consolidation down here. And let me show you that here. Okay, so here's the NVIDIA gap again. And then, so right here, price kind of drifted down, sort of was hovering around here, and then it kind of dipped and then sort of fired out from there. On Tuesday and then Wednesday, and then that was that gap on Thursday here. So right here, this was an area of consolidation here, and then right here, there was an exhaustion of sellers. So within this little narrow range here, there was sort of an agreement. There was agreement between willing buyers and willing sellers that were shuffling shares back and forth within this little narrow price range here. And then all of a sudden, there was some change of perception and an exhaustion of sellers here. And so for these trades to have occurred, buyers more or less had to run up the price chart until they encountered willing sellers, because obviously it takes two to make a trade. And so in order for these trades to have occurred, obviously then the buyers had to run up until they found asks or offers at higher prices. And so that's the narrative here. So when price returns to this level, because it's only been in here a very short amount of time, it was only here a very brief amount of time, really like for an hour and a half or 2 hours. There's the expectation when price returns here, there is still some residual price pressure in here. Because again, we have this exhaustion of sellers, and we can think of sellers as the supply of shares available at this particular level. And of course, the buyers represents the demand for shares. And so right here, supply and demand, they were in balance. And then right here, it goes out of balance as the suppliers essentially back up the price chart. And then the buyers, of course, follow them. So right here, when there's this exhaustion of sellers and there's or the removal of supply here, that only leaves demand. Consequently, we refer to this zone here as a demand zone. Okay, so that's the terminology here. So when price returns to this demand zone, this is where we can express a bullish trade. And we can express the bullish trade, and I'll kind of bring up a little text a little later here. But essentially, what we can do, and at its most simple approach, is to either buy the stock here at 495 or so, or one could express the trade also by putting on any number of options positions. And of course, the most obvious one would be to buy a call, and we'll go into that in a couple of minutes in slightly greater depth there. All right, so that's the story here. So right here, this is where, and I'm going to go back to the 2-hour chart here because it'll be easier here. Save a little space here. So right here, here's the 2-hour chart. Here's that 30-minute level that I just showed you here. And so right here, in order to get there, that's about 2.5% down. And then if we go back a little further in time, in here, there's another kind of a 1-hour or a 30-minute level that's right here. And again, price kind of consolidated with it within here. And we can see there was those overlapping candles there. Inside of that, there's actually a consolidation in the 30-minute chart. And so when price returns here, this is another level of demand right here. Down here, this is kind of sloppy support here, but it's not actually clean demand here. Okay, so that's just something I marked here. But this is not a level that we would necessarily trade off of. Right down here, that 2.5% down, and this is about 4% down. So that's another level here. So we have these marked up here. Those are levels that are in the chart. I do want to show you something that might almost be considered a potential, call it almost an implicit level here. So right here we have the big NVIDIA gap here, and I was just looking at the chart here, and my eye kind of got drawn to the price axis here. And if you notice, we're sitting in that 500 region now. And of course, as we know, or most of us know, the market will, particularly when it comes to retail traders, oftentimes react to kind of psychological big round numbers, right? And so multiples of 100 and 500, of course, would be considered to be kind of a big deal in regard to that. And so a lot of times there may not be anything technical in the chart, support and resistance, supply and demand, pivot points, whatever it might be. There might not be anything there, but sometimes the market will simply react to the psychological number. So what I did was I placed the line right here at the psychological round number. So that's sitting right there at 500. And I was kind of looking at this. And so what I did was I threw a Fibonacci retracement on here just to kind of see how did things lay out with this swing. And wouldn't you know it, when you do that, and I already laid out the chart here, or the ladder, in order not to waste time doing it manually here. And well, wouldn't you know it, when you actually laid that out there. And so there's the top of the swing, there's the bottom of the swing, okay? And if you notice right there at the 500 level, you're sitting right at the 61.8% Fibonacci retracement. And so it's quite possible, as we know, sometimes the market will react to Fibonacci levels. And so as a result, because of the fact that this 61.8 is essentially right at the 500 mark, I am going to keep an eye on that. I would never blindly trade off of it, but this definitely becomes, I think, at least a potential area of interest because of the confluence of the big round number and the 61.8 Fibonacci retracement from up here. So I thought I would just point that out because it might be interesting and it might something transpire. And the other thing, of course, is that the NVIDIA gap here is a gap, and of course, gaps more often than not tend to get filled. And so as a result, if we start to fill this gap, this might be a place where it gets filled partially. but then it might actually get stopped by this, what I refer to as kind of an implicit level here. So we'll see what happens with the SPY, but I figured I would point that out. All right, so that's the SPY. We'll turn to the triple Qs, which of course is the ETF of the Nasdaq 100. Okay, and so of course here's the NVIDIA gap as is present in just about every chart there is now, and so right down here, here is in the 2-hour chart, price came down, kind of consolidated there, and then we have this little pop here. This is not the greatest. It's a weak demand zone here. It's really not what I would consider to be a quality level here, because of the fact that it's in terms of the structure and the fact that it really doesn't go very far once the exit occurs. But it is something at least I'm going to sort of keep my eye on. Right here, this is kind of sloppy, a sloppy formation here, and so there's really nothing over here. So right here is where we closed on the Qs at 437, and so this level right here at 419, that's sitting. And actually, let me get rid of these extra labels now from before. So this level down here at 419 off of the 436, we would need about a 17-point pullback on here. So that would be obviously about a 2 or 2.5. So that would, excuse me, we need approximately about a 4% drop to get down from here to here. So, whether we're going to see that or not, I don't know. But what, and of course, we could end up with some levels that are higher here. But that would require price to kind of come back, make a right turn, and then sort of have another pop. And then we might actually end up with, we might end up with something, further up. But for the moment, this is where our demand zone is, right here at 4%. And I'm not even all that thrilled about that. This is there's no supply here, okay? Because right here, again, we're at an all-time high. And so more or less, we've matched that all-time high here. So there is no fresh supply here. Right here, this is an area of tested supply. We're right here where we had a rally, then price popped and dropped from here. And so that's an area of we can think of this now as really resistance at this point if price falls from here. But there's really no trading levels here because again we're at an all-time high. So that's the story with the Qs. If we go to the Russell 2000, the IWM, here's where we are now, and you can see now we're off from this high over here, and right now, let's get these lines out of here. So right here, this was an area where there was some clear demand here, and we refer to this as a rally, a base, and a rally there. And then you can see price came back into it, and then we got this nice bounce out of that. Up here, this is again now this is resistance, and it's kind of tested supply from prior levels here, and that kind of goes back to here. Okay, so this is an area of supply that was an area of supply. So I really wouldn't be looking to trade off of this because this might all get used up, was used up. And in fact, right down here, this has already been tested. So this is really not a fresh level. Okay. And so from where we are now, the next fresh level is down here. And so that's about a 7% drop here. So again, not in particular, if you're rooting for the market, we're not necessarily looking for a 7% drop. But in terms of the level, that just happens to be where it is. And as we always tell our subscribers, not every chart has a nice, neat, or a quick setup that's going to come to us. And sometimes you just need to be patient. And so this is one of those areas, actually, we would probably be looking for this to perhaps pop a little and then kind of pull back and then create another demand zone that might be, further up from where we are now. But for the moment, this is just you trade the chart that you're given, not the chart that you want. And in this particular case, there's just nothing nearby. So that's the Russell 2000. And if I recall, this is the TLT, which is the ETF of the longer term bonds. And so this is where we are right now on that. And so this is kind of just a series of stair-step moves down here. So I don't really see anything clean to trade up here. It's possible right in here. No, actually, see right here, you can see there was an exhaustion of buyers here. Okay. Okay, but again, it just went sideways. So there was no energetic long move that occurred here. And I refer to this as kind of a stair step move. It just kind of went from here to there to there to there to there. But there was really no kind of sort of sharp downward thrust here. So there's really no clean, nice supply here. Having said that, up here, we will be looking at this as a potential level that if price might just turn from here. And if we see evidence that price is turning from this level, which is about 4% higher, from about 94 to a little less than 98, so it's about a 4% difference here. But if we get that 4% pop here, this would be an area where we could potentially express a bearish trade. And of course, expressing a bearish trade in this case, of course, would be shorting the TLT or buying a put at this level. Okay, so, but again, there's really nothing that I'm enthused about over here. And then down here, again, this is an area that's kind of we kind of have some weak support here, and that kind of goes back to this area right here, where the price came in, sort of popped here, and then we can see it's been kind of back here, kind of hugging the top of this level. It's kind of trying to sort of push it out of there, but there's really nothing tradable there. So I'm really not in love with anything there. So really, the next clean area of demand would be right here. Price drops, consolidates, and then kind of pops up, and then even that, this is really more again one of these. It really doesn't go very far. So in fact, there's really nothing that again my eye gets drawn to here on the TLT. So we'll now take a look at some popular symbols. We'll take a look at the number of the FANG stocks. And of course, Facebook is no longer Facebook, it's Meta. So really, I guess these would be the MANG stocks at this point. And then so we got the MANG stocks, and then also threw in Tesla. For good reason, for good measure. It's a popular symbol that people like to trade, so we threw that in as a bonus. So we'll take a look at Apple here, and here's Apple. So here's where we closed at Apple with Apple about 182.5, and so this was an area of supply that essentially got created here. Price. There's a little bullish candle there, price consolidated, and then notice price starts down, and then there's a gap, and then it kind of continues, energetically down from this region. Okay, and so this is an area where, again, supply and demand were in balance, and then in this case, there was an exhaustion of buyers. Okay, before we talk about an exhaustion of sellers, out of this level represents an exhaustion of buyers. And essentially, the sellers ran down the price chart until they encountered willing buyers, and that's of course how this downward surge occurred. Okay, so where we are now is here at 182.50, and in order to get back to this region of supply, we would have to get up to about 189. That 6.5 point rise would represent about a 3.5% move. Okay, so that's where we'd have to go on Apple to kind of get to a level where we would consider shorting, and again expressing a bearish trade by either shorting the stock or buying a call, or of course one could also even collect premium and sell a bear call vertical spread. That would be another way to express the trade at this level here. Okay, so that's that level of supply there, and then there is also one sitting right here. Okay, over here, this is the 52-week. That blue line here, that represents the 52-week high for Apple at 199.60. Okay, and so this level up here would still be below its 52-week high, and so that, in comparison to where we are now, that's about 6.5% higher at 190. Call it 195. So that would be about a 13-point rise. In order to then get to that level to short. But this would be the first level right here that we could actually think about a bearish trade. All right, so that's Apple. Taking a look at Google. Okay. So kind of similar to what we just saw in Apple right there. There's the 52-week high. So there's on the daily chart. This was an area of supply that's sitting here at 152 or 153. That's about 5% above where we are now. And then right here, this is an area of supply right here, and that's about 2.5% above where we are now at 145.30, up to about 149. Okay, so that's about a what the $3.70 move to get there, and that's roughly equal to about a 2.6% shift from where we are now to get there. So that's the again, that's where we would express a bearish. These are places where we could express a bearish trade, and then in terms of expressing a bullish trade, there's really nothing nearby of at least in these time frames of a that's a really an equality here. Right here, this was an area of tested demand right here, where price rallied, consolidated, and then there was a gap and a go there. So price returned here, and you can see it kind of bounced in and out of here a couple of times, and then kind of rocketed out of there. This is an area we can think of this now as kind of sloppy support here. You can see price started here. It's been back here once, twice, right there, right at the front door of that. It was back there a fourth time. So I don't really consider this anything. There's nothing here that we consider worth trading here. So on the other hand, right here, there's a rally, a base, and then a rally there. And then notice that it kind of pops, pauses, and then there's another, there's that gap and go there. So there's a kind of substantial move out of this region of consolidation. And then, of course, price has not been back there since. But of course, for that to happen, we would then, price would have to return back to this region. So that's about 8% down from where we are now. So again, if you're rooting for the market, probably don't want to see that happen. But if it does, we'll be ready. So that's cool. Take a look at Netflix. So here's where we are on Netflix. And right here, in fact, this was a region where we had this 30-minute level. We actually had a successful trade with our subscribers recently on this. So that's what those arrows are there for. In fact, I'll get rid of them right now. So here's where we are right now. And so we have an area of supply above that's roughly about 4% higher right there. Okay. And then this was a tested area of demand. So, and I'm looking at this thing here. This isn't a potential area of interest, but I don't know. We're gonna watch. We'll watch the price action here, because this is actually kind of a chunky zone, and we certainly got a pop out of it. But there was, and there was a bit of follow through here. But if you notice, it doesn't really go very far in comparison to the depth of this zone. So there's really the risk and reward on this is probably not all that great. In fact, if I throw a ladder in here, you'll see what I'm talking about here. If this is the zone right here, okay, this barely goes kind of 2 to 1 in comparison to the depth of the zone, because that's 1 to 1. And then right there, that wick up there, that's roughly about a 2 to 1 distance from where we are in comparison to the depth of the zone here. So we generally want to see a move that's kind of like 3, 4, 5 to 1, because we're always trying to get at least 2 to 3 to 1 on our trade. So having an initial move of 2 to 1, it really doesn't offer great prospects in terms of earning an appropriate profit. So I'm really not in love with this. It's an area of interest, but we'll keep an eye on it. But unless one can we would have to more or less find an area probably at the bottom of the zone to buy it in order to improve the risk reward proposition for a trade like this. But as it lays out right here, this is not interesting for the reason that I just described here. All right. So really there's nothing below there. And in terms of above, right here, this actually goes back, I think, a long way. So right in here, if we actually turn this into a daily chart here, we just do that right here. So if we look at the daily chart on this, fact, right here are our notes, and I'll go through these in a second or two about expressing the trade. But right here is the here's that demand, that supply zone right here. So price rallies up, consolidates, and then notice that major push down. Okay, and that occurred at the beginning of 2022. So that actually goes back over 2 years for the supply zone here. So that's that region up here. So that would be that, and so that would be a place where we could actually express a bearish trade. And if we now flash forward to what I was just showing you here, here are the notes that I have here for expressing a trade. So if we have a supply zone, okay, again, the simple way to express trade would be to short a stock. You could also buy a put. I'd also mentioning buying selling a bear call vertical spread, and then also one could also buy a bear put vertical spread, which essentially is you're buying a put and then you're selling and then you're selling another put further below in order to kind of reduce the premium and sort of make it a gentler trade. Okay, by reducing your delta, and it also it changes the other Greeks. So that's another way. And of course, there are numerous other option strategies. On the other hand, if you have a demand zone, everything is the exact opposite. Of course, you would buy a stock at the demand zone. You could also buy a call, and we have our general rules about buying a call. You want to buy enough time, and then you also want to buy a call that is relatively near the money, so that you're getting an appropriate delta, so that if you're right about the trade, it's kind of worth your while. You'll catch a fair chunk of that move via delta. So, and then of course you also want to buy enough time so that you're not getting unduly hurt by time decay. And then of course the other ways, the other simple strategies, if you want to collect premium at the demand zone, you can sell a bull put vertical spread. Okay. So that's the story with Netflix. If we take our look at Tesla, so here's where we are now. This is an area of interest here on the 2-hour chart. I'm going to go back to this again here. So here's the 2-hour chart. There's a rally, a base, and a drop here. Prices then came back. You can see it then it fired out of there once. We'll keep an eye on this. The risk and reward on it isn't that great, and the fact that price has now been back there again, whether I don't know whether this is necessarily going to be a great setup. It's really not a fresh level, and again, it's also not a level where with his really great risk reward, as I described before when we were looking at the Netflix setup there. So here's where we are now. So from where we are now, obviously this would be about a 4% move up here. So that's a possibility. And this is the on the daily chart here. There is this origin of the gap, and it kind of just fires down from there. It may very well turn out to be a great level, but the thing is, just because you have the origin of a massive gap, it doesn't necessarily mean that you're going to have a great trade, because that would just be too easy. If all you had to do in trading was identify the origin of a massive gap, and then when price returns to it, hit the buy or sell button, trading would be pretty easy if that's all you had to do. So I think we'll keep an eye on this, but I think it's a little obvious. So at least we wouldn't just be diving in with both feet here, but we'll certainly be watching that level, and that's around 209. So we'll keep an eye on that one above here as well. Okay, and then below is that level here at about 3.5% down, and right here there's a drop. Price consolidates and then kind of rockets out of there. It's in there for a brief amount of time. And so this, again, that represents that exhaustion of sellers. So this is a demand zone here. So that's about 3.5% down. And that's a pretty good level there. All right. So there's Tesla, and we'll kind of wrap up here by looking at Amazon. So right now, Amazon is sitting right at the top here of this. It's sitting right here, and it's kind of been battling in this supply zone that got created. Price came up here and more or less has been hanging out here for, this was basically sitting here right after the NVIDIA gap. It kind of came up and now kind of got stuck and been sort of stopped by price here, by this level here. So this level has kind of done half its job. It has stopped the rise in price, but it hasn't turned it around, turned it and sent it back down. So this, again, this supply zone here has really only done half of its job. And it's kind of looking like it's really trying to break there. So I really wouldn't be racing to short it there. And of course, so again, right there's the NVIDIA gap. So in terms of where we are now, this is the next, this is actually an area of tested supply, or we can think of this as resistance above here. So we're less in love with that. So that's about 5% up. So again, we're not really looking. I don't think there's really anything great there. Let me just go. In fact, this goes back to this is a supply zone from mid 2021, and that was kind of like sort of all the sort of the bullish. There was a bullish rise in Amazon, of course. You know, there was a market recovery from the decimation of the onset of COVID, and then of course all of the work at home stocks, shop at home stocks, all of those, you know, so Zoom and Amazon and all these other things, of course, kind of rode the wave of the bullish sentiment that came out of COVID because of what they did. So in terms of Amazon, this goes back to, there's a level here from 2021, but it's really more resistance than fresh supply. So that's 5% down here. And then right here, again, here's that NVIDIA gap. But as I just said a minute ago, you know, you can't just blindly go, well, I'm gonna trade off of here, because yes, technically this is a you know, this might be, you know, considered to be a demand zone here. Price rallied, consolidated, you then gapped, and then it kind of continued there. But this is just painfully obvious. And again, it's a news-driven gap. And again, it's painfully obvious. So we'll keep an eye on it, but I would not be racing necessarily to just dive in and expect that automatically this is going to work. But that's about 4% down from where we are now. All right. So at any rate, that's what I got here. So I hope you found this both helpful and informative. So here's the you know, the explanation about the demand zones and supply zones that I just talked to you about, and you'll find this in our YouTube description there. But the other thing is also, I would be delighted to tell you about a little bit more about Precision Trading Labs, as well as to talk to you about how we use these zones in order to create high probability controlled risk trades. All right. So thank you very much for the privilege of your time. This is Mitch Firestone with Precision Trading Labs, and I will see you all next time. Take care. Bye-bye.